Sophie Cruz. Welcome back to the Midnight Market Podcast. Today we have Joshua Hams.
Hi.
He's an expert in the financial market field, and he's going to help us understand from the TikTok ban, the Melania coin, the S&P 500 surge, and so much more today in today's podcast. Without further ado, we're going to get into the questions.
Yeah, no, I appreciate the classification of expert. I don't know if I'd say I'm an expert. I'm just some 20-year-old junior. I've read quite a few books, so if reading a few books makes me an expert, then that I am. But I'm excited for this.
I have a question for you. How is Bitcoin different from the other cryptocurrencies?
Yeah, that's a great question. Bitcoin is such a unique cryptocurrency. It's such a unique asset overall because it's really the only decentralized asset that we have, at least digitally speaking. We have gold that's somewhat decentralized, but if you look at right now, our currency that we use is the U.S. dollar. That's controlled by the U.S. government. The U.S. government can print more U.S. dollars. They can control the money supply, all of that. But Bitcoin's different. It's decentralized. There's no central authority that controls it. It exists on a proof-of-work blockchain in the sense that there are all these different companies who run Bitcoin, and even individuals will run computers to mine Bitcoin. That'll allow for the blockchain to work. That allows for transactions to go through. There are 1 megabyte blocks that are sent every 10 minutes. And there's no central authority that can control it in the sense that it was created by Satoshi Nakamoto. We don't know who that is. It could be a person. It could be a group of people. It could be dead. But they stepped away from the project, okay? They have $100 billion in Bitcoin. They haven't withdrawn a single Bitcoin, any of it. So we don't know who the creator is. There's no authority behind it. Compared to, let's say, Ethereum, for example, there is a group behind Ethereum, and they can control the currency to an extent. So there was actually some kind of glitch that happened a few years ago, a few months ago, and someone scammed somebody else out of a few $1 million. They could actually step into the blockchain and switch the transaction, switch along the blockchain, mess with it to an extent to be able to rectify that problem, to take away the money that somebody stole. So there is central authority behind Ethereum that can manipulate the currency, that can affect the value of it. And people don't like a single authority having that control. So Bitcoin is very popular among people who are very free market libertarians, people who do not want there to be a central authority that controls the currency. And that doesn't exist for Bitcoin. It's very similar to gold. People say it's a digital gold because, again, there isn't a single person who can just print more gold. We can mine more gold. We can it's not the same as Bitcoin where we have a fixed amount of Bitcoin, but it's very similar to the sense in that sense.
Yeah, I mean, that makes sense why it's like different to the rest.
Yeah, and it gets grouped in with a lot of other cryptocurrencies as well because the whole blockchain technology is perfect for Bitcoin. Because of the blockchain, because that the proof of work chain exists, the blockchain allows for the proof of work chain to exist among many different computers. There's no one central computer that has enough power to be able to affect the blockchain. And so the blockchain is what allows for Bitcoin to be decentralized. It could not be decentralized if it weren't for the blockchain. But what's weird is you have other currencies like Ethereum, for example. I don't know the intricacies of Ethereum, but a bunch of different currencies that use a blockchain, which is helpful for that same decentralized reason, but there's still a central authority that controls the currency. And so they're not really using the blockchain to its full extent. Bitcoin is a lot different than a lot of the other coins in that sense. And I was even reading ahead to your questions. We'll talk about it in a few minutes. But that plays a big role in some of these other currencies that are popping up. A lot of these other cryptos, the Bitcoiners, they don't want to be associated with them to an extent, a lot of the meme coins, because there are fundamental attributes of Bitcoin that make it a reasonable currency to use that don't exist for other coins like meme coins.
And do you ever think that Bitcoin's dominance will be over?
I think that Bitcoin has a lot of potential. Right now, we've seen it trade as a speculative asset. People are investing in Bitcoin as in almost like a company for the future of the asset. However, for Bitcoin to truly exist as a stable currency, it would need to obviously it can't be a stable currency with 50% swings in it every year. And if it really
it'd have to be more stable.
Yeah, and that's just going to happen as people adopt it, as people fully recognize it for the currency that it is. We can see a world for 50 years from now it fluctuates by 1 or 2% a year because everybody just universally accepts it as valuable. And so it has that potential. I am personally skeptical on its ability to actually exist as a currency that we base our economies off of. I know as Trump is really pro. Supposedly all the Bitcoiners are getting him into the Bitcoin thing. They want the whole, the Bitcoin reserve the government has. At the end of the day, the government's not going to give up the power to print money. That's never going to happen. Even if it was objectively better, which I'm not making any political statements on whether it's better or better, whether it's ideal or not ideal for the government to be able the ability to print money. But the government's not going to give the power. So this Bitcoin reserve is a political play. He's not actually going to move us to a Bitcoin standard, as many people want us to go to.
Okay, I'll switch up to a different scenario.
Yeah.
TikTok and ByteDance.
I know.
Okay, so Trump gave ByteDance 75 days to make a deal to keep the app in the US.
Yeah.
But here's the thing. he wants the US to have 50% ownership on it.
Yeah.
Do you think Snap and Meta are going to get affected by this positively?
This is such a multifaceted question. There's so much going on here. I mean, I could talk about this for a while. And it's probably going to become irrelevant too by the time we get this thing edited and uploaded. I guarantee you it's going to be an advancement in the story. It's going to make some of this obsolete. But certainly, no, I love Instagram Reels. I will always swear by Instagram Reels. I don't even like TikTok. I didn't have it downloaded for the longest time. It wasn't until they literally made us, ban TikTok that I finally downloaded it. It's just in case I wanted to ever use it, which I'm not going to want to. Instagram Reels is awesome. And I definitely think there'll be a lot of people moving from TikTok to Instagram because they're basically perfect substitutes because the algorithms are both phenomenal. And I don't really see this as some big loss, TikTok getting banned, because we literally have a perfect substitute with basically Instagram Reels. I don't know about Snapchat. Even LinkedIn's got Reels now, which is just weird.
LinkedIn, Handshake.
I know. Handshake. Why does Handshake have... It's the weirdest thing. YouTube Shorts is different. I like YouTube Shorts because those are the things you watch when eating because they're almost all words. Like Instagram has they have subtitles and comments and what is it? They have I get text on Instagram. I get a meme all text and a lot of reading.
Which of your friends have liked the video?
Oh, I love that part. And
you love that?
I have some friends with the most savage taste in Instagram Reels, and I can just get the dirt on them and stuff.
You can actually see who's actually liking that type of video.
I got to the point where I was sending people Reels. I'm like, dude, you gotta unlike this. You gotta unlike this. You have to. This is gonna get you in trouble. But back to answer your question. Oh yeah, definitely. People are gonna probably come to Instagram and stuff like that. The whole TikTok thing is it's a weird temporary thing because Trump's not even going to enforce it. However, it's still so risky. It's super risky for let's say Google Play or the App Store to not comply with the law, even though Trump said they're not going to enforce the law. It's still risky. They could be charged $5,000 per user.
$5,000 per user.
Yeah, per user. And so they could rack up a pretty big bill really quickly. So even if Trump says he's not going to enforce it, they're not taking any risks. But then the TikTok guy doesn't want to sell it too. So we'll see what happens. I don't know. It's also if you think about it, should they even ban TikTok? I know this isn't your question, but this is something relevant that I want to talk about economically speaking. Because largely I like to argue that the free market in terms of foreign transactions, we shouldn't have tariffs, I don't think. I don't think we should be out here blocking two companies from merging. I don't like how we're not allowing U.S. Steel to merge with Nippon Steel and that thing and stuff. We should allow for international trade, free borders. They say, when goods stop crossing borders and wars start or bullets start, something like that. And so it's good. It's best for countries to collaborate and trade to make them both better off than it is to fight each other. With that said, the only real reason it's justified to block a company is for national security. And so if it's genuinely a really big national security threat, it's totally fine to block TikTok in my thought. If it's actually a national security threat.
Yeah, national security.
And the Supreme Court upheld that too. They all agreed, 9-0, that it was a national security threat. Yeah. I'm not super knowledgeable of the topic or anything like that. I just wanted to bring that up.
Okay, so now about Melania Coin.
I know.
Okay, Melania Coin, for the ones who don't know, is making headlines now. Yeah. And this is turning into a bigger crypto conversation. No. Do you think it even holds a real value?
No, freaking no. It's disappointing that the first thing that Trump does as president is release a cryptocurrency. So I'm not going to comment on politics. What I will say is I think that was an absolutely terrible play, and here's why. So I don't know much Melania Coin, but Trump Coin specifically, him and his administration own 80% of the supply. So they release a currency, and they keep 80% of it. In meme coins 101. So this is all on the Solana blockchain, for example. So you have things I think the big one was Chill Guy or Fart Coin. Fart Coin is so dumb. That people are buying into. And they're not even their own coins. At least Dogecoin, that was an OG. I don't approve of it. I just think it's cool. Okay. I wouldn't buy it, but I can take it out of context. He approves Dogecoin. But that's an OG meme coin, right? That was 2016. Kids were talking about it in class. I'm like, okay, this is cool. This is funny. But it was its own coin. All these other meme coins, they're based off Solana. So it's Solana, and it's a coin off the Solana blockchain. So it's not even its own cryptocurrency to an extent. And so it's on Solana. They have no validity, whatever. You can go on right now, open pump.fund. You can make a currency in 1 minute. Literally 1 minute, and people can have your own cryptocurrency. And most of them are rug pulls. 80-90% of them are rug pulls. Because what you can do is you can issue a cryptocurrency and keep, let's say, for example, hypothetically, random number, 80% for yourself. Okay, that's what Trump did. It's not a random number. 80% for himself. So he controls 80% of the supply. He owns 80% of the coin. Now, if you were going to launch a cryptocurrency to celebrate your presidency, fine. But do not keep 80% of the supply. Because they're going to sell it to the market, and they're going to get lots of money by selling it.
Yeah.
You issue a currency and you keep 80% of the supply.
Because I heard a lot
That
of
is
people
wrong.
made money from it, and
Of
then
course, they traded it.
lost.
Yeah, no, and people lost money. I mean, what bothers me a lot about this is his own supporters are going to buy this thing, thinking like, this is awesome, I want to support him, and they're going to lose money on it. And it's one thing for it to be a trader who knows what they're doing. I don't feel bad for any of the traders out there who lost money. I lost money in the Hawk Tuah coin, okay, just for the record. Because I was trying to trade it, and I'm like, you know what? There's no way this woman blows up her entire career for a rug pull. This is not getting rug pulled. There's no way, and it got rug pulled. Okay, but now she's canceled, and now she lost a lot of potential money. Like that was a not good play on her part. I bet on her not getting scammed and being smart about this. She was not smart, and therefore I lost my bet. But so I'm not complaining about that because I took a risk and I accepted. I knew there was a possibility that happened, but it takes advantage of innocent people who just don't really understand this stuff.
The trading world.
It's really unfortunate. And so I don't think there's no intrinsic value whatsoever. It's completely dumb. And the dumbest thing is he already has he's a meme stock. He has DJT. It's a complete meme stock. There's no fundamentals at all behind it. No financials behind it at all. They lose money and they got it's a complete joke financially. But it trades very well. He's made more money than his entire real estate career on his stock on DJT just because of the election and his popularity.
Okay.
And he's just doing that again with this cryptocurrency.
Smart.
But
And
he
that
could do a
happens.
cryptocurrency better than this. He should, if he were to do a cryptocurrency, because he's like, I want a cryptocurrency in my presidency. First of all, he should not be affiliated with it in the first place, and that shouldn't be a thing. But even if he wanted to, he shouldn't keep his supply. Don't do it on Solana. Do your own full currency. Like put in more effort than just doing it off Solana.
Yeah.
And then the last thing he should have done is he shouldn't have endorsed it. He should have at least said, you're risking your everything buying this.
Yes.
Overall, I do not think that he did the right thing with that. And I'm just really sad that this is what he's doing so far. Yeah.
Switching up to the stock market, the S&P 500 jumped 2.9% in the last few
I know.
months.
I know.
What's
Exciting.
behind this rally? And do you think it signals recovery?
Yeah. So recovery, no, not at all. No, it does not signal recovery. So the stock market, you got to remember, does not follow the economy. It does not follow. Yeah, it's not the same thing as the economy. So it goes up this much because a lot of it was CPI. Now, our inflation is going up. Our inflation is very problematic, and I do not like inflation. And the Fed started cutting rates because inflation was going down. Numbers are going down. I'm like, cool. I go on a break. I go skiing for a couple weeks. Come back. Inflation's going up. So inflation is getting worse and worse month over month. No, but basically CPI came out as slightly lower than expected. Very slightly. Yeah, it's the government's way of measuring inflation. Now, basically CPI comes out as a little bit cooler than expected, like slightly, very, very marginally, but still pretty bad. And the stock market's like, this is it. That's awesome. Inflation's doing better, and it goes up. I'm like, okay, maybe that's not, let's not celebrate too soon. I really think we're going to have a long period of, concern over inflation. Even then, there's an argument to say that the CPI understates inflation. They'll say, look at commodities, look at the pricings of those. Even look at the price of a house. Price of a house has gone up by 4 to 7% a year over the last 80 years. And that's despite the fact that we've gotten even better producing houses than we were 80 years ago. Why does it cost more to build a house today than it does 80 years ago when we are better at building houses? We're way more efficient now. Yeah. And so you look at other things like meat, for example, is another thing. I'm vegetarian, but that's an example people use. Those things, some people think that inflation is even worse than 3%.
Yeah.
And I think there's a reasonable
can
argument to be
tell.
made
yeah,
there.
it's worsened.
Yeah. And so overall, I think inflation is concerning. The stock market's celebrating too soon on it. But at the same time, it's more than just inflation. You got all the semiconductor stocks, all the NVIDIA, the AI boom. There's actually, I think, decent numbers to support the exponential growth these companies are experiencing. And I do subscribe to the idea that really semiconductors, they're going to be the future of technology, that they're really freaking important. I bought NVIDIA in 2017 or something like that. I was 14 years old. I can't remember how long ago. I didn't hold it for that long, but I was into VR back then. I'm like, VR is the future. You got to buy NVIDIA. I've been using the graphics cards for the longest time. I had the 1070 Ti, and now I'm on the 3060 Ti, and there's the 4080s now, and probably the 50 something's coming out soon. Wow. They got a lot of different types of cards, but I've been a fan of them for a long time. So I wish I didn't sell their stock, but I do think that there's potential. I think a lot of the rallying has to do with AI and stuff like that. My biggest concern is, I don't know if you're familiar with Peter Schiff. He's this guy, free market libertarian type guy who does podcasts and stuff. He likes to argue that there's this big recession coming on. My understanding is the basis of that argument has to do with Keynesian economics, how the government keeps on spending and spending and spending something at the economy. Because the idea is to get to a recession, we spend more to get us out of a recession. And right now, we are not in a recession, but we're still spending a ridiculous amount of money. So what are we doing when we actually enter a recession? No, we can't keep on spending to stimulate the economy forever. There might be a correction, you know? It might come next year or in the next 30 years or 50 years. He thinks it's going to come in the next few years. But my concern is, you know, we get a recession that we cannot use Keynesian economics to get us out of. And we may need to start off paying off our debt or something like that. We want to try and make it a little bit smaller. And this is something that I'm not like, you know, this is something that I don't want to speak too much about. Because you got to remember, I'm just some 20-year-old who's read a few books on economics. I'm not, you know, the master of economics. I don't have a PhD in it or something like that. So there are a lot of people who say, you know, maybe the national debt isn't as bad as you think it is, or Keynesian economics is great. I don't want to get too into the economic schools and what is and what isn't the case. But I do see a reasonable argument that, economically speaking, that we could experience some Great Depression type like scenario because of how much we're spending, because of the government debt. Because this bubble that grows bigger and bigger and bigger without getting a chance to pop.
Talking about government spending, I don't want to take too much time, but the California fires, LA fires, this is just insane. Like, I was reading something on the 1907 Depression. Do you remember that by any chance?
I know what you're talking about.
So, do you remember there were like fires in San Francisco?
Okay.
That kind of reminded me of it, but I just think it's like a broad idea.
Yeah, this is another, you know, topic that can be a little you know, a little hard to talk about. You know, I feel bad for everyone who's struggling with the fires. I only wish the best for them. The thing is, people say that the fires, that rebuilding from the fires, they'll stimulate the economy. Because we're spending money, we're building. And this is a very Keynesian versus neoclassical economics view right here. That, is it going to stimulate the economy? I wouldn't think it is, because maybe in the short term, we do see more spending, and that's, in a way, good for the economy. But you got to remember that that something got destroyed, and we're rebuilding it. So at the end, we spend all this money. We only rebuild what we had before. You get long-term economic growth when you're increasing your technology, where you're improving technology so you can do more and more. So if we were to build new infrastructure, new technology that makes us operate even quicker, even get more stuff done, build more things, convert more natural resources into resources for people, that would be amazing. And that's going to lead to long-term technological growth. But destroying and then rebuilding something is not going to lead to technological growth. And so I don't see the rebuilding of the wildfires, for example, to be a very productive economic action in the long run.
Yeah. Okay, so finally, let's talk about the Fed meeting coming up January 29th.
Exciting.
How could this meeting shape the future of 2025, financially speaking?
So I checked the CME Fed Watch tool about 2 hours ago. 99.5% chance no change. And there's a 0.5% chance that there will be a rate cut.
0.5?
0.5% chance. It's not happening. I don't think there'll be a rate cut for the entire year because inflation's going up. And everyone pretty much realizes that. So what's going to happen is Jerome Powell is going to get up and he's going to say, we are not cutting rates and absolutely nothing will happen because we already knew that. But then we'll start to get out more information. He'll do a speech half an hour later. And that's what's going to be really important. Because you got all the quants there with their algorithms analyzing word for word what's going to happen in the speech. What does he think of this? What do you think of that? He's probably going to come out as more hawkish than expected. I think that he should be more hawkish than the market wants him to be. And that's what annoys me when the market goes up, when CPI is slightly lower than expected. I'm like, it's still a problem. And I think the market, you can see it over the last year or two, has had a really bad habit of being thinking the Fed's more dovish than they actually are, or things will actually have to be. They're like, we're seeing 6 rate cuts in 2024, we saw 3. We're seeing a couple this year, no. The market keeps on overestimating the amount of rate cuts that we're going to have.
And
so,
we're overestimating a 0.5 chance.
Well, no, it was in the past.
It was?
No, yeah, completely. They thought there'll be like 7 rate cuts in 2024 going into that, or something ridiculous like that. And so they keep on overestimating, and keep on thinking the Fed's going to cut sooner than it actually is. I wouldn't bet on this now. I would have bet this on the year ago in hindsight, but not now because I think the market kind of realizes that, I think 1 rate cut's priced in for the year. So I think the market's starting to realize that, but I do think largely you see the stock market going up after CPI numbers are terrible because it's a little bit better than expected. And the market still seems to largely be underestimating, how bad inflation is. And I think Jerome Powell's going to come up there. He's going to be super hawkish, and they're going to all be upset that he's super hawkish, and the market's going to go down. That's my opinion on it.
Okay. So for us interested in the market, do you think we need to keep an eye on certain indicators? Yeah,
of course. So, the best thing to look at is the yield curve because, that's a free market trading off based off of expectations for rates and everything like that. And so that's, so the yield curve is important. Looking at the 10-year treasury is doing. We can see over the last few months, the 10-year has been rising a lot. pushing almost 5%. It's like 4.7+% because of people realizing rates are going to be higher for a longer period of time. So that's the best thing to keep track of. Obviously, you should know the economic indicators. Like at this point, just know what they are. Even if you don't agree with them, even if you think CPI sucks, still know what it is as a number, what it's at. All the basic stuff. But the yield curve is probably the best thing to track.
Okay, the yield.
And what if I had to say one thing? Okay.
Thank you everyone for listening to us today. Thank you for watching and see you next time.
The Midnight Markets podcast by the GWU Stock and Portfolio Management Club features student discussions on finance and market trends. This content is informational only, not professional advice.